All right, what's up, everybody? It is Wednesday, June 24th. I'm a little bit concerned right here, but I've been talking about this stuff. We had a pullback in the market today, but I'm a little bit concerned for a number of reasons. First of all, as I have been telling you, the tax flows, particularly employment and withholding tax deposits, I track those every single day. I've been talking about those. They are getting weaker. There is no sign in those tax flows. Forget about a turnaround. There's no sign in those tax flows of any stability when you look at them on a year-over-year basis. They are negative. They are down versus last year, which that alone, you got to go all the way back 10, 11 years to the Great Recession to see a year-over-year negative differential. So that's happening, but it's just a straight line down. There's no stability in there whatsoever. And again, let me repeat, I am comparing the post-lockdown period to the lockdown period. And in the post-lockdown period from May 15th to June 23rd, those tax flows are lower than in the lockdown period. That's not good. Now I said, okay, maybe I'm being impatient. Things are still starting to open up. New York just opened up on Monday, so we're just into it, a couple of days, a few days here, 3 days. But on the other hand, we're seeing new outbreaks. A surge in places like Texas, in Florida, in Arizona, in North Carolina, a bunch of places. You can Google that and you could see where the virus is just surging now. So the market, has been flying high. It's been way, way overbought on a technical, basis. I think there was too much optimism, at least short term, to be able to deal with something like this, a negative surprise with the virus or whatever happened to come along. So we're seeing this. Now, on the positive side, and I'm hoping this is going to play out in a way that I initially predicted, which is we get a correction, a kind of a technical correction. We wash out some of these day traders. They're like this sports blog guy who runs the what is that blog? You know what I'm talking about? Barstool Sports. This guy, the market only goes up. Rule number one. Rule number two. If you're wondering whether to buy or sell, refer to rule number one. Now, I've said in the past the market is a growth function. It tends to go up over time. But you need the right conditions in place. I don't want any of you out there thinking I'm some kind of perma bull. Over the long term, I am bullish because it's the nature of people to want to do better. It's the nature of businesses to innovate and try to grow their profits. It's the nature of societies, at least, somewhat free societies, democracies, to try to improve generation upon generation. So the stock market reflects that growth. It reflects innovation. It reflects, all that stuff. But when a guy who writes a sports blog just says, hey, the market only goes up, and if you're wondering whether to buy or sell, refer to rule number one, which is the market only goes up. That's just... that's very unsophisticated. It's very naive. You need the right conditions in place. Believe me. You can have conditions which create sort of a malaise for a long period of time. And I've used the example in the past of Japan. So you got to be careful when you start throwing things like that around. And to me, when I look at a guy like that, who's basically, he writes a sports blog. And by the way, he's done very well. He's very successful. I give him a lot of credit for that. But, basically what happened is that there's no sports right now. So these guys are getting antsy. They don't know what to do with themselves, so they jumped into the stock market. And he's got a big following. Anyway, I digress. What am I talking about this guy for anyway? I was going to say on the positive side, we had the EIA Weekly Petroleum Status Report come out today, and there was some good numbers on the demand side. All right? Gasoline demand is almost back to where it was before the virus crash. I would say it is just about back to the lower end of the pre-virus environment. All right, about over 8 million barrels a day. Not bad. Refiner inputs coming back up. I think they were 13.8 million or something around there. That's still historically low, but that's well off its lows. But I mean, we were running over 17 million barrels a day before the crash, refiner inputs. And of course, that's refinery crude oil demand. Distillate demand is hanging in there. It's not exactly blowing through the roof. The problem is there's exports picked up, both in crude exports and product exports. So I like what I see in terms of demand. If you want to take that as another kind of barometer or snapshot of the economy, it's good that we see that. And by the way, we're short oil and it's coming down. But it's good that we see that because that's an indicator that, you know, things are starting to come back, notwithstanding what I'm seeing in the employment tax data. The problem in the oil today, I'm telling you, we got a surprise, huge rebound in domestic oil production in the latest week through June 19th, up 500,000 barrels a day in 1 week. That might be a record increase in 1 week. I'm pretty sure that's a record. I went back, I couldn't find something in 1 week that big. 500,000 barrels. So, and I had kind of an inkling. I thought last week when we looked at the rig count numbers, we were going to see an increase. We had something like 15 or 17 consecutive weeks down. I was pretty sure we were going to see an increase. We didn't. I'm positive that this week in the rig count, we're going to see an increase in rig counts for the first time, whatever, 17, 18 weeks or 15, 16 weeks. And it could be a shockingly big increase in rig count. So oil production's going back up again. We have record oil inventories. We have near record gasoline inventories. We have record distillate inventories. So the oil market has got to discount, you know, what's happening right now. And the way it's going to do that is with lower prices. I'm not saying they're going to stay low, but it's got to pull back, and then we'll see what happens with the economy. There's one other thing. Let me mention this, and I have mentioned it in the past. You got July coming up. All right? What happens in July? Taxes are due, unless Mnuchin decides to push it back again. He said something today that he was considering pushing back the deadline again for filing taxes. That would be good. But anyway, July, taxes are due. Rent payments are due. And remember, you don't just, if you're one of these people who didn't pay your rent or your mortgage payments are due, if you didn't pay, it's not like, okay, here's July. No, you got to pay whenever this started. March, April, May, June, July, all in one shot like that. A lot of people are not going to be able to do that. So that $600 extra per week of unemployment benefits, that goes away too in July. So a lot of potentially bad things are going to happen in July. We got to deal with that. So I'm short the market, and I got to see what's going to happen. I mean, right now, without that stuff happening in July, I would say let's have a nice pullback. Hopefully things I'm seeing with oil demand and gasoline demand is starting to say, you know, hey, the economy's coming back. Maybe some of those employment tax flows will pick up. Then we get back in. But right now, I can't say that. Anyway, I got my new podcast out today. Go to the link here and listen to my podcast. And don't forget, I am the only one who has an applied approach to MMT. There are a lot of MMT academics out there, and they talk about all their academic theories. I have taken the concepts of MMT and applied them to trading and investing in the markets. Nobody else does that. So go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.